Hey, everybody. We're back. It's Pat with Jeffrey Funk, who is, a PhD from Carnegie, technologist. A lot of good stuff he's done. First to recognize smartphones in the 90s, apps, in the thousands. He's all good with assessments on, all sorts of new things. Has a book out we just read called Unicorn Hypes and Bubbles. Talks about bubbles, potential bubbles in the stock market. We'll get into that a little bit. He's also, has 5 other books published, et cetera, et cetera. So why don't you welcome Miss Dr. Jeffrey Funk to the show. Jeff, what's up? Matt's not here. This is kind of a late night edition. I cut my hand here, actually. So we're trying to get Jeff, get his props. So here we go, Jeff. How you doing?
Good to be here, and I'll just get right into the key issue
Please.
because we're looking at a huge bubble, the AI bubble. And why do I say it's a bubble? Well, investments and bubbles are to some extent really simple to understand. Investment is you put money in and you get money out. If you get a lot of money out, much more than you put in, that's a good investment. Bubbles are the same way. When companies are putting money in, but they're not getting much out, that's a bubble. And in the case of the generative AI, and I want to distinguish in generative and predictive AI, because this is about this generative AI that many of you use to write things. And that's fine if you write things with it, you do that. But see, a bubble is about money. And right now, more money has been going into the infrastructure for AI than went in for the dot-com bubble. Yet, when you look at the revenues, and you want to focus on the end user, the revenues from the end user are very small. They were big in the dot-com bubble, but they're small right now. You're talking about maybe 30 billion last year that OpenAI, Anthropic, and furthermore, they have huge losses, big losses. Why is that? Because they're setting the prices very low. So they set the prices very low, they get people to use it, but they're not paying for the whole cost.
Right. Okay. So go ahead. Keep going.
Well, I was going to add to this that you see that 30 billion, but if you look at the dot-com bubble back in 2000, there was 1.5 trillion. People wanted the internet so much that they paid a lot of money for it. First of all, they had to buy a PC for it, and they were spending a lot. They also had to pay for internet subscriptions. They were paying a lot. They also bought things on e-commerce. You add up those 3 things, you come up with $1.5 trillion in 2000. Now, that's in 2024 dollars, I admit. But still, compare that to the 30 billion that end users are paying for generative AI. There's no comparison. This bubble is giant.
Right. Okay. So, we've had about 50, 60 podcasts, right? And, we've had some bears on, we've had some bubble people on. And I've learned a couple things, right? So I have some specific questions that I have here I want to ask, right? Because we keep talking about, I think it helps us identify like what you really believe, okay? So, you're well known for arguing that many emerging technologies are in bubbles, but markets are also discounting massive productivity gains. How do you distinguish a true speculative bubble from early stage price discovery, right?
Well, that's what I'm talking about, revenues, because that's the whole thing. It's all about revenues. Now, you might say, well, the revenues that come later. Okay, that's fine. But you have to realize that the huge stock market values have already come. The huge investment has already come. There should be revenues. And right now, so I talked about 30 billion in end user revenues. That's tiny. Now let's talk, but let's jump to productivity. You look at any technology for the last 200 years, productivity has always come long after revenues and profits come. So the first thing you get is revenues. People buy things. Then the company who's selling it starts to make profits because they're selling something that's so good and everybody wants to pay so much more that they make a profit.
Right.
Okay. Then productivity comes.
Okay, so let me just keep moving down the chain here, right? Because there's some good questions. Historically, many technologies that look like bubbles, railroads, the internet, smartphones, ultimately transformed the economy. In hindsight, were those bubbles wrong or were they just early?
Well, first of all, smartphones never had a bubble. There was never a run-up in share prices. There was a bubble in 2000, the dot-com bubble. There was a 2008 subprime mortgage bubble. Before that, really, if you're talking about technology bubble, you have to go back to 1929, and that wasn't even a technology bubble. That was a bubble of companies building too many factories for demand that didn't come.
Right.
So these technology bubbles are really unusual. Now, I admit, I mean, the dot-com bubble brought lots of productivity gains, but it brought revenues first. You know, if you look at computers, let's talk about computers for a second, because this is, people have found that productivity from computers really didn't emerge till 1990s. But I'll tell you, revenue came in the 1950s. Profits came in the 1950s. It took a long time. There is no evidence of productivity from at the macro level from generative AI. There's no evidence. No economist shows that.
Okay, so
Yeah.
let me back up. Stop. So I'm on your
Yeah.
side here a little bit, right? So I read your
Oh, I
book,
know.
Unicorn Hype and Bubbles. It was written in
Yeah.
2024. So maybe it's a little year dated, but I don't really think so, right? And here's what I learned, right? So let's talk about this first of all. So you talk about there being 1,200 unicorns, right? And maybe there's more now, whatever. Let's just say there's 1,200. Doesn't matter. So what do you think's wrong with that? Or why is that bad? Or it just, I mean, those companies would just be IPOs anyway. So there'd be, if they're just, what's wrong with 1,200 unicorns?
I don't have a problem with unicorns. I don't have a problem with entrepreneurship. I have a bachelor's in physics, a PhD in engineering. I've been pro technology my entire life. It's just that I
I
started to
understand you.
notice about 10 years ago that things weren't working out. And I'm still pro technology. I still want generative AI to succeed, and it's succeeding in some areas. I am merely arguing that it's a bubble. When you say something's a bubble, you aren't saying it's bad, right? The dot-com bubble is a bubble, but it turned out to add things. Generative AI is doing there's some useful applications for generative. It's just that those applications and the revenues from them are so small compared to the infrastructure commitments and investments that it's a bubble.
Okay,
So
so
I'm not
what
saying
you said,
generative AI is bad.
you talked about like marginal improvement in your book. I thought that was an interesting argument, like, EVs to gas, mRNA to vaccines, solar to whatever the legacy power is. I mean,
Yeah.
there's some things that probably aren't as, I don't know, the marginal improvement has not been that great. Let's talk about that a little bit.
Yeah, you're right. So EVs are great, but they're not as good as the first cars that Henry Ford, Mercedes Benz, and a whole bunch of other companies introduced 120 years ago. They didn't provide the level of benefits. Solar cells are great too, but they don't provide the level of benefits that the things that Thomas Edison introduced 140
You mean the
years ago.
marginal increase in benefit, like
Yeah,
it used to be a 10, now it's a 4 or whatever is what you're saying.
yeah. So,
Right, got it.
we're
Okay.
not getting that big revolution now
Okay,
yet.
so then you also talked about like some trends, or we talk about like themes here at our Tuttle. So we're a thematic company. We have thematic ETFs. Matt's a thematic investor, right? So this is kind of what we focus on. But you also made a list of like technologies or kind of things that were supposed to be the future technologies, right? And I made a list of like 15 of them, right? And I just went through this on my own. And you've made some. I don't know if it's necessarily like we're in a bubble, but I think your argument here is that things aren't as like the promise of things isn't as great. So let me talk about. Here's the point, right? So there are like 15 things you discussed, and I put them into a list of winners, kind of middles, and losers, right? In my opinion, right? The winners: crypto, AI, robotics, Airbnb, whatever you want to call that type of stuff, and Uber. Okay, that ride sharing. I think those you could argue have been winners. Maybe you could argue AI is not because of this, that, but to my opinion, they're winners, right? The middles, right, are, blockchain, eVTOL or helicopters, whatever, wearables. I don't think that's been that great. A VR, AR. I mean, that seems like whatever. DNA sequencing. I think there's been a lot of talk. I don't think it's really just killed it. And, stuff like ride sharing, Waymo and all that, right? All that was promised, but I don't think it's really delivered. Okay. And then you talk about losers. You got stuff like cloud kitchen, digital healthcare, 3D printing. I don't think that's really done that great. IoT. I don't think there's been much of that. I mean, so basically you're batting 333, right? But you're getting paid like you're batting at 1,000 or 700 is what you're saying, basically. That was my take from your book. Do you agree with that assessment?
Yeah, pretty much. I mean, we can argue around the edges. I use revenues a lot to make my decision about whether or not a technology is successful or not. You can
Right.
look at return on investment and say, you can also look at, the increase in the stock prices for some of these, and then the stock prices collapsed. So a lot of these unicorn startups, they went public, and then they collapsed. The share price collapsed. The successes, as you mentioned, Uber and Airbnb, those are two of the successes. The rest didn't succeed. And
Right.
if you look at the publicly traded unicorns that were worth more than $1 billion before they went public, then they went public. If you look at those, like 85% aren't making money. They're unprofitable,
Right.
right? So overall, and you can argue some of the investors made money off those. You see, some of the investors made money because the company went public, the share price went way up, they sold out. But in the end, there was a lot of big losers. Public people,
Right.
retail investors who bought in and then lost all kinds of money.
Okay.
I consider that, you know, that's a loss. That's not something we want.
So if Matt was sitting here, right, and I would argue that he's a very smart investor. Okay, we can talk about it till we're blue in the face, but let's just say he is, right? He would come here and say to you, yeah, I could be short like Michael Burry or whatever for the rest of my life, and yeah, eventually the broken clock's right once or twice a day or whatever it is. But well, I'm going to be waiting 3 years and losing zillions of dollars on all my customers until I'm right. Is that? I mean, that's just kind of that's the other argument, right?
No, no, you're right. I mean, Michael Burry, when he shorted those subprime mortgages, he got sued because his investors were mad that he was missing out on. There was other investors. There were people who shorted some of these stocks, who shorted the dot-com stock, who said it's a bubble. They got fired. So,
Right.
right, there's a lot of incentive to stay there. And Nobel laureate Robert Shiller talks about this, talks about how all the valuations are insane, but the logic you're presenting begins to make it look like it's the insanity is sanity. And so, yeah, it's hard to you can stick in it and just wait and wait until the bubble breaks. It's up to you. And there's a lot of that thinking. And there's a lot of, and thinking has changed over the last 25 years because people aren't as concerned about profits anymore, right? So people
Right.
used to, if you look back 40 years ago, I've read all these old articles. Plus, I was paying attention to the stock market 40 years ago. If you realize that once a company wasn't profitable, it was out. Stock went down. That the stock market
Right.
very quickly penalized companies. They don't do that anymore. And a lot
Yeah.
of that comes from Amazon. Amazon, people say, well, Amazon made it big and they were losing money. They were
Right. No, I
losing
get
$3
it.
billion.
I mean, I get it. Okay, so this kind of brings me to the next question. All right. Is a bubble
Okay.
defined by price excess or by a mismatch between current revenues and future optionality? Right. So, I mean, like, again, you can say there's no revenue, but you would also say, God, AI is going to be pretty big. So, where's the trade off? How do you define that? I mean, you're making a pretty big ballsy call to say, oh, we're
Well,
in a
first of
bubble
all,
when
it's
there's
profits.
AI,
That's what we're all waiting for, profits.
profit.
Now, you can
Simply
say
stated.
revenues come from profits. I agree. And
Right.
when you look at some of these estimates that I'm thinking of the guy of Sequoia, Covello, I think is his name. He
Okay.
was saying that we needed $600 billion in revenues last year to justify all the investments. That number that he gave, $600 billion, assumed 50% margins. So he was saying, well, okay, we got this revenues, we need these revenues coming in, and then later we're going to have 50% margins and 50% profits.
Right.
So they're both kind of tied together. I emphasize the fact that what is unprecedented is that the AI companies are selling set prices that are so much lower than their costs. That's how they're getting revenues, but they're not getting much revenues. That's what makes this so dangerous. And so the only way that OpenAI and Anthropic and these firms survive is that investors keep these investors who put money in the private companies. They put the money in there. They have to keep doing that for them to survive.
Right.
which they may do for a long time, right? Because they think it's rational.
Okay, so next question. Yeah, so AI capex is enormous, but hyperscalers are actually funding it from cash flow, not debt, right? Does that weaken the bubble argument?
Well, it depends on, you got to realize that the cloud service providers, the data centers, they get paid. They may be losing money. It's hard to say because firms like, well, CoreWeave isn't, but Google and Meta and these firms, they don't distinguish between AI cloud revenues and non-AI cloud revenues. So we don't know if they're making money. But yeah, they have cash flow. They have tremendous cash flow. That comes from the monopolies they have in their old businesses. That's how they're making money. Now, if they want to spend it on AI cloud, fine. But remember that they're getting paid by OpenAI. When people access an OpenAI model, that requests the data processing from the data centers, from the AI cloud centers.
Yeah.
AI then pays them. That's
Right.
why OpenAI loses so much money, because they are paying those data centers. So the data centers are happy; they're making tons of money. Then they pay NVIDIA. That's where the money comes from. It comes from the fact that OpenAI is losing tons of money. People want to say NVIDIA is an AI company. No, it makes chips that process AI models.
Right.
And it makes money because OpenAI is willing to pay all this, to set these low prices and pay this money and subsidize the existence of these data centers and of NVIDIA.
Right. Okay. So this leads to the next question. This is good timing. All right. So if NVIDIA, Microsoft, and Google are deploying AI because it lowers marginal costs, is that speculation or standard capital investment?
Lowers marginal cost of what? For somebody using AI?
Well, I suppose it lowers the marginal cost of their, their compute or whatever. They're buying more, so it's lowering the marginal cost. Is this a bad question?
Yeah,
Because we can
that's not
cut this
really
one.
the issue. The issue
Very
is
good
the end
question.
user.
Okay.
The end
Okay.
user is the bottleneck. Is the end user getting something from AI? And
And
there's
you,
no evidence that there is. I mean, look at the articles you read about AI. How many articles spend time talking about the end user and how this end user is using AI and getting so many benefits? And when I mean end user, I mean like a company, right? There's individuals, of course, that go on and on and on about how it helps them, but that's individual productivity,
right.
right? In a company, the reason why we have all these people together is because their output depends on them working together somehow. So when somebody talks about how well AI works for them, they're kind of they ignore first of all that downstream people maybe not so happy that they're using AI because they're getting all this AI slop, right? And they have to fix all these problems. The second thing is that when an individual talks about how great AI is for them, they are assuming that somehow they can extrapolate from their job and how AI
Right.
helps them to the whole economy.
Okay.
Right?
So
Nobody's
let,
ever assumed that there are people like this. That is why we use revenues. That is why people look at revenues, because revenues, it's all these people voting with their money saying, I like this, I like that, I'm going to spend lots of money on that because I love
okay.
it.
So I have these questions because I'm trying to hold your feet to the fire, right? Purposely,
Yeah.
right? So let me just I'm going to keep doing it, right? So
Okay.
many
No.
critics say AI hasn't shown up in productivity yet, but isn't that true for most general purpose technologies early on? I
Well,
mean,
as I
what do we
said, that
expect,
is
kind of,
true.
right?
Computers, right? It took computers 40 years. But the fact is that long before the productivity and right in the beginning of the industry emerged and right really when the technology introduced, they had revenues, they had profits. You see, you got to have revenues and profits before you have productivity improvement. Productivity improvement is going to be delayed for a very long time.
Okay.
So yeah,
Okay, so
you
let me ask you another question, right? So,
yeah.
what signals do you watch that definitely tell you a technology has crossed from hype into a durable economic utility? So, like, when do we know that AI is legit, or when would you say, "Yeah, no moss, I'm wrong, AI is for real"? When would you ever say that?
I look at the revenues and the profits. That's the first thing. The second thing is I'm always looking for stories that are really good. For example, I read the Wall Street Journal very closely. The Wall Street Journal sometimes calls out that, but sometimes doesn't. Like recently, I had this article about how all this AI was showing up in weird places in the company. This was just a few days ago. This article, yeah, all these weird kind of applications. There's never one big one. You see, in the beginning of the
I
internet,
buy that. I agree with that. Really, actually, it's funny you say that.
there was like,
That's actually kind of an original, good thought because you are right. It is kind of a bunch of kind of
but
small
the really
things,
interesting thing about this
novelty
article
things.
was that you look at the comments, all the people, and remember, these are Wall Street Journal business people reading it. They're saying AI is crap. We tried it, it didn't work. I was stunned.
Right. Okay. Well, let me keep moving on down the pipe here. Right. So if AI lifts operating, and this is kind of what Matt believes. I believe, as a company, I think we're thematically saying that we believe AI, mixed with old generational companies are going to lift operating margins. Right. So, question: if AI lifts operating margins instead of revenue growth, are markets mispricing where the benefits actually accrue? So you're looking for revs, but what if it's, in operating margins because, suddenly we don't need any real people anymore. Or I don't know. People, we are that much more productive or whatever, right?
No, you're right. Companies could get all this benefit because they're doing AI themselves, right? They're not buying these services, and that's
Right.
possible. Now, the
Okay.
problem is that all of the studies uh, kind of show that AI isn't working that well, right? So the MIT study is the most famous, but there's Atlassian Software did one. There's other softwares that track, other surveys that track whether AI is used, whether companies report using AI to make products and services. None of this is up. So,
Let me go off script here for a moment. Let me ask you a question, right?
yeah.
So I'm just going to ask like a counter question, right? Devil's advocate-ish. So if you're saying, isn't it such that this is my belief, right? I believe that until we get to like real, like real AGI or real reasoning, I think we have a long way to go on the infrastructure build because I think that's the dream. Maybe that dream itself has no real purpose, but I think that's kind of where it's going. So I think until that happens, we're still going to, I still think the CapEx is through the roof, personally, right? But having said that, I'm giving you the counter argument. I'm kind of putting it back in your face. You're saying it's not working, right? Then therefore, doesn't that mean that we're going to just continue to invest in CapEx until it does work? I'm kind of putting your argument back in your own face a little bit, right? You know what I mean?
Yeah. Well, a lot of CEOs have bought into AI, right? Now, past technology usually starts at the bottom. The engineers say we like this, and then it goes up to the top. But Sam Altman and his friends all went for the CEOs, and they convinced the CEOs this works. So they're spending a lot of, they're really doing a lot of experimentation. And they're also been convinced that AGI is coming.
Right.
Now we should be able to see if AGI is coming. We should be able to see it on the incremental improvements in the software that AI models that these companies are releasing. GPT-5 was not better. And when you look at these metrics, people have all these crazy metrics. I deal with them a paper that's come out in a couple of days. It's really ridiculous, all these metrics. Like, for example, this METR says the length of task, and when by length of task, I mean how long it takes a human to do it. AI can do those longer tasks, and it's actually doubling every 7 months. But you know what? It's for a task that AI can only complete with 50% accuracy.
Yeah.
It's meaningless. Who cares if it does 50% accuracy? We want 99.99% accuracy, right?
Okay.
That's
All right.
useful for us.
Okay. So let me move on. Right. So we talk here a lot about like second order thinking or third order thinking. Right. So for investors who I guess a bad phrase, but for investors who don't want to bet on a single winner, what second order beneficiaries of this, how would you, maybe at the third order, what would you be shorting or how would you express your investment? How would you express your opinion at, an investment show, let's say? So how would you express your opinions in an investment arena? Is there something you would short or you would buy or you wouldn't buy or, how would you make money based on this?
Well, I'm not an investment expert at all. And I admit that you can make
thematically.
Money. You can make money on a bad company. You can invest in a bad company, make lots of money, because all that matters is if there's somebody else out there who buys the stock after you, right? So,
right. Well,
so that's the thing about investment. That's what it's mostly about. It's not about this is good, this is bad, this is going to bring profits to companies. It's not about that. It's about, is somebody else going to buy the stock after I do, or a lot of people, and that's what it is. It's
Okay, so I mean, it's
getting
FOMO, fear
other
of missing
tools.
out, as we say. You know, I mean, it's a FOMO thing. But so I mean, so again, I'm just holding your feet to the fire here again.
Yeah.
You have no specific like, okay, Pat, I would do this. You think it's any AI name that is just trading at 77 times the revenue or higher, I'd be looking at is kind of what you're saying. I mean, that's kind of the analysis, right?
Well, there was also another recent Wall Street Journal about the about healthcare, and about there are AI that they're using mostly for administrative tasks. So you see, those are successful. Now, the article didn't distinguish between predictive and generative AI, so I don't know which it was, and I don't know, and they didn't name the companies. But there are companies that are supplying this administrative software for different companies. They do a scheduling and stuff. Hey, that seems to work.
Okay,
So
kind
you
of
can
so
make money off
AI
that.
for the workplace, AI kind of productivity workplace stuff. You would think, okay, that has a
Yeah.
real utility, right? Yeah, okay, so that's good. All right, good one. All right,
Because
so
let me just add this one thing. My big problem with AI is that we've gone for moonshots. We're always trying to do these
no, I
moonshots,
agree with that.
and forget it. Very simple
So
new
it's a
technology.
singles
You
game.
find the
Look for the
first user, you find the
singles.
second user, you find the third user. That's the challenge.
You got it. Okay, that's what Matt would say. I think if I understand what you're saying correctly. So it's the picks and axes, really. All right. So let's say you're correct, right? Air comes out of the bubble. Then what? Where would you go? Was there you have to wait and figure it out then, or what would be on your shopping list if whatever happens? What if we have a
Well,
drop
obviously
in AI stocks by 75% or whatever? Then what?
yeah, there isn't going
Stay
to
away
be.
forever?
It's going to be a
Is there
big
a point
problem for a
you'd
couple of
buy?
years. The dot-com bubble, I think it went down about 50% in 1 year, and then it went down to reach the minimum after 2 years. This is a long time, right? What do you do then? You're trying to avoid losing big money. There will be companies that go bankrupt, it
Right.
probably won't be Google or somebody like that. It's going to be
Right.
somebody small. I'm sure OpenAI will be completely restructured, and maybe Anthropic will do better. I mean, Wall Street Journal is kind of positive about them. They say that they're doing better, but they don't release any financial figures, so you don't know.
Right.
Um, and companies like CoreWeave will probably go bankrupt. And there will be some small companies that aren't getting much attention that will end up doing well. That's the thing. People say, "Oh, it's all decided yet, all the winners." No, it isn't. It's not decided at all. It's a
Right.
long ways off. So if you look carefully for, like I talked about, these administrative companies, they provide this administrative software. There are
Yeah.
companies that I'm sure that are offering value.
Right. Matt has said similar things too, like some of these old, like Adobe or something that is, taking on some AI things. He likes those names, I believe. I think that's what he's been saying lately. You know,
It could be. It could
Salesforce, whatever.
Yeah,
Okay.
it
So
could
let me
be.
move on. All right. So, what would change your mind to make you say this isn't a bubble, this is a structural shift? It's kind of the same
More
question over and
revenue,
over.
more revenues,
Revenue. Got
profits,
it.
and stories, success stories, right? These success stories, a bigger success story. There's a few, but not really. I wouldn't say big. They're just small, like I just mentioned, but big success stories.
All right, last big bad question here. 5 years from now, what do you think investors misunderstood about today's technology markets?
Well, the
Same
technology
basic thing, yeah?
market has changed in 25 years. A
Right?
long time ago, it was about you get some profits because you find some users, you get some profits, you grow, you grow. It was all very slow. The last 15 years, it's all about the tech sector just starts hyping something. Not because they
Right.
want to succeed with good products, but because they want to hype up the valuation, increase the valuation, make the money from shareholders, and then it's over for them, right? So a lot of startups, right, what I deal with in my book, that's all they did. They hyped everything up. They made a lot of
Right.
money when they went public,
Okay.
but
All
there
right.
was nothing
So
really there.
I'm
That's
going to
what's
go,
really changed. You
I'm
got
going
to be
back to your
careful with
book.
this.
I'm going back to your book. Last thing, more or less. So your conclusion, your concluding chapter is we do, right? How can we reduce our exposure to hype and overreaction? There is no easy answer. Sarbanes-Oxley really didn't work in theory. Dodd-Frank didn't seem to work in theory. So, like, what is the, I don't know, what's the answer, let's say?
Well, there isn't an easy answer, and it also depends on does an investor want an answer, or do serious people who want to fix the system want an answer?
Is it the
Right?
same
That's
thing
kind
or
of what I
no?
was addressing there.
Oh, yeah, yeah. Well, how do we, yeah,
Yeah,
so how
and
do we
so
systematically fix what's systematically wrong then?
well, it's very hard. It's that investors are being really foolish. They're believing everything that these tech leaders say.
Right,
And of course, the same thing goes in our political sphere, right? There's the gods of the left and the gods of the right, and people tend to believe one or the other when really they shouldn't believe in anything. We want people to think more deeply about what's going on and what really would suggest there's a good technology. But people don't want to do that. People are just in a hurry. It's like, oh, it's big. I can get in really early, and then I get the money.
right, right. You also talk a little bit about the celebrity CEO in your book too, right? Or was that something else I read? Do you talk about that?
Celebrity CEO.
Well, like Elon Musk, is kind
Yeah,
of like worth like 27 trillion on the stock valuation or whatever.
yeah,
You know what I mean?
yeah.
Like, what do you make of all that?
Yeah, well,
Zuckerberg,
that's
Musk,
the
all these
problem.
guys.
People believe these guys and think that they know the future. And like I said, these gods of the left or gods of the right or gods of the tech or gods of the anti-tech, right? You have people, Jeffrey Hinton saying, "Oh, it's going to cause all these, it's going to destroy the world."
Right.
Now it'll cause some
Yeah.
problems, but it'll bring some benefits. It'll, you know. But I'm trying to get people to think more seriously about this. And I taught a course on economics and new technology uh, before I retired, and we went into all this stuff. And students need to learn it. Young people need to learn this. Young people shouldn't just learn, "Oh, this is great. You got to invest in this," or "This is terrible.
Right.
You don't invest." They have to learn the thinking, right?
Right.
And academics don't want to do that. I mean, there are no academics that say, "Here's how you should approach these new technologies." Instead, there's all these academics who are hyping AI, as opposed to telling you, "Here's how to think about it. Here's how to
Right.
work. Are improvements occurring? Is this getting better? Are there some happy customers? Some really good applications?" These are questions that people need to be asking, and preferably we help people address these questions when they're young. They learn about these things.
Okay. So, last thing. So, is there anything that in your mind, to be, hopeful about or bullish about or positive about in the current climate, environment, et cetera, et cetera? Anything? Like,
Yeah,
no?
it's hard. I mean, I don't want to say about politics because that's just sad as ever, right? It's just
Right.
and
Okay. But like, I mean, like, what if so? I don't really know the best way to say this other than if you're an investor, you're telling somebody, you know what, gold or cash. I mean, in your mind, where would gold would probably not hit all the bubble spots for you too, right? So it wouldn't be gold, so it would be just staying cash then, yeah.
well, it's hard to say. I'm not really a good person to ask for investment. I mean, I've spent my life. See, I grew up. I got my PhD in a time when people were saying, "We want to build a better world." I was really idealistic. We're going to build a better world,
Right.
and it didn't happen, right?
Right.
Or a little bit. I mean, certainly the internet of the '90s, I was really optimistic about, but since the internet, we haven't really had many good technologies, and we talked about some of the small success stories.
Right.
Um, but
So I mean,
it's
you're just
hard to
basically
believe.
saying put on the brakes, man. Right.
I mean, I talk about my book. I'd say Starlink, it's decent. It doesn't have very many subscribers, under 10 million. It's not a big deal,
Right.
but there are happy customers, and apparently it's profitable. Okay, well, that's a success story. Uh,
Okay.
these wearables, iPhone and stuff, they're not getting better as fast as people claimed. I mean, there were people 20 years ago arguing that we were going to have all these sensors in our phone that was going to fix our health, identify if you have cancer and all these kinds of things. None of that's happened, but still, there's a lot of people who are happy about their phone that monitors their heart rate, counts the number of steps. Okay.
Right. Yeah. Yeah, it doesn't. I agree with your point. It doesn't seem like a, mental thematic shift in how people live. I think it's possible, but I agree. It doesn't seem to have delivered. All right, last thing. So then we'll call it. So, like you in your book, you said, there's in 2017 there was promise for an artificial leaf that turns CO2 into liquid fuel. Right. This is one of the things you noted that was kind of BS or whatever. Right. So I mean, remember, right? There's a lot. I would just say this, right? From my perspective, it seems to me like going through your book, reading the tea leaves myself. The hit rate is not, it's 25-30%. It's not 50-60, and that's really what you're saying in my mind. I don't think you're ringing the death knell in your book, but you're basically saying, you know what, be careful because not every new tech is hitting out of the park, and if you really think about it, the marginal advances haven't really been that great across the board, really. I mean, not to justify whatever valuations or whatever we have now. That's your overall assessment. Yeah.
Yeah, you're right. That's it.
Yeah. All right, man. So where does everyone find you? So it's Dr. Jeffrey Funk. You're on LinkedIn. He has a book. I read it on Kindle. It's called Unicorns, Hype, and Bubble. You're on LinkedIn, but are you on Twitter anywhere else? Or no?
I am, but I have less than 300 followers.
All right. Yeah. All right. Well, you're very popular on LinkedIn, though. So, guys, check him out, Jeffrey Funk. Thanks for coming on.
Okay. Thanks, Pat.
All right. Have a good day, sir. Appreciate it.
Okay.
Bye.
Bye.